afternoon to all our viewers, all our joinees here for this particular summit. We have a very esteemed panel here. They have a lot to share. And of course, we know that lifeline for any project, any business is huge amount of capital and long-term capital when it comes to infrastructure-related sectors. And here we have a panel where people have money. They're waiting to invest in India. But what is it that is probably stopping them, and what else do we require to do to get that money? Because for the investors, the returns are going to be very important, and also the credibility of the project as well as the executioners. Let's start with a very well-known name in the real estate sector. Sanjay is right here. He's been through many cycles. And Sanjay, are we finally at the cusp where a lot of foreign capital waiting at the fence could really make inroads into the country? There are a lot of things changing really macroeconomic-wise and the industry-wise. But where do we stand right now, and what are those game-changing events that have really taken place?
I wish we were there, that we had reached a point where the investor would actually spend all the capital. But I think where we were 3 years ago, from that position, we have actually moved positively in the right direction. As a business in India for the last 20 years, we have learned the way to grow in this country is to be a little more patient. Don't come to pressures, because this country is very demanding and the environment is very challenging. And we have been the beneficiary of all the hard work that we have done. I think the market is great. I think the government is doing everything right at this point of time. You look at the regulatory environment, you look at the promotion of this country, the GDP. While in India we may see things differently right now, but I think we are at the very initial stage of consumption picking up. And I wouldn't be surprised that in the next 2 years, we achieve the goal that you've just said, that are we really at the cusp of seeing capital going in. I think every potential investor is looking at India. Obviously, not everybody wants to be a pioneer. They all want to go to key markets. They want to be in key businesses. Once they gain confidence in this new India, they will move to the next level. All right, Akshay, you are part of Indiabulls Asset Management. You're heading that. You have a 3,000 crore rupees fund to invest here. Is there a huge gap in demand and supply of cash for infrastructure, real estate-based sectors and projects?
There is demand for good quality projects. All the fund managers in the industry want to invest in projects that can be delivered on time. Fund managers do want to look at track record, corporate governance, quality before they invest. I can say that domestic capital, while 5 years back wasn't sufficient to counterbalance the inflow or the outflow of foreign capital, today the domestic capital is coming in hordes, obviously chasing better risk-adjusted returns. The government security rate today is below 7%, 10-year GSEC. Equity markets are at its peak, so people are a little skeptical about the longevity of the bull run in the equity markets. So people are looking at alternative assets, and therefore fundraising for the real estate sector through the alternate fund route isn't quite tough. However, people are quite quality conscious. Both institutional investors and family office HNI investors want better projects, builders that have built on time. So while there is a lot of demand for these projects, there is quality consciousness, which therefore reduces the speed of flow to these projects.
So demanding investors always brings out the best in the industry, and we are hoping for that. But Shirish, what has been your experience? And now is Morgan Stanley looking at investments? Which are the areas that really attract you?
We have had a significant amount of investment, as you all probably are aware, early stage. So in 2006 and 2007, Morgan Stanley invested quite a bit of funds. We did a little bit in sort of in the 12, 13 sort of range. Haven't invested in the last couple of years, but are actively seeking opportunities going into 17 and 18. So we, probably, hope to invest I want to say several $100 million ideally over the next few years. So in all types of projects. So we're looking at office, we're looking at residential, we're looking at retail. So honestly, the issue isn't availability of capital. The issue is really more finding the right partner, finding the right deal, finding the right valuation. And to the extent we can try and work those out, capital is definitely available. And that would probably be the sentiment, across, I think, this whole group and frankly across the world. Because like you said, capital is available. I think the question is how can we match, capital with the right project?
Right. So let me come to another fund which is very big globally in terms of REITs investments. And of course, REITs and WITs are picking up now in India. And Cohen and Steers hasn't really had much of a presence in India so far. But Leon, you look at the entire Asia-Pac region and you haven't thought so far that India should be a destination of investments. But right now, with REITs really picking up, are you actively engaged in looking at assets here for investment?
Well, first, we have had investments in India before in the past, not a substantial amount. That's because the structures of some of these companies provided limited visibility on their cash flows as well as earnings and pretty high volatility. And as a result, they weren't as suitable for our investors. Having said that, India is a huge market with significant potential, and we have always kept a very close eye on what's been happening. So with the development of the REIT code, I think it could be a game changer. It helps because by default, right, by definition, some of these REITs could offer more stable, predictable cash flows and a growing dividend yield. So the fact that we're here, I think we are. I think it could go places, and we are definitely paying very close attention to it.
So you have seen and studied and invested in REITs in other Asia-Pac regions. What is it that India needs to keep in mind right now when we are just about starting? Because I do know that a lot of investors and a lot of aspirants in REITs and InvITs are having active discussions on what the yield should be, and various other models of how this should really go about. At the moment, what have you seen, and what are those things that an investor would like to see in India?
Well, I think as our President Joe Harvey alluded to earlier, ideally they'll have the right structures in the sense that the sponsors will view this as a long-term development rather than a single transaction. So, as from my experience in other Asian markets, what we've seen it is because the REITs provided a channel for some of the sponsors to, effectively recycle their capital. In some jurisdictions, they have been very, they have been a bit twisted, in the sense that some sponsors have pushed the limits too far through financial engineering and taking on a significant amount of debt. And as a result, the REITs in those markets went out to a good start. Hopefully India can skip that bit, and then
all right. So you're averse to primarily raising funds for debt reduction, for deleveraging. It should be capital growth that a lot of investors would like to fund a lot of projects for.